I'm not going to lie, I missed 2020 and 2021. I never pre-listed a single property because the value was going up, sometimes even by like 10% in a 6-month holding period.
Hi, I'm Tim Bratz, and every week I sit down with the top influential entrepreneurs in the country to discuss how to leave a true legacy in all things happiness, health, wealth, and wisdom. This is the Legacy Podcast. Hey guys, Tim Bratz here. Welcome to the Legacy Podcast. Today I am with my friend Callie Loewen. Callie has multiple businesses on the investment side, some large scale, super high end type flips and new build type stuff going on. They have a real estate brokerage, a lot of really good stuff. She's been a member of Legacy family for many years now, and got to know her husband, their business partner, and been on a lot of really cool trips and hanging out with them and learning a lot about what their businesses look like. They own over 100 doors currently in their investment side, and just a lot of really good stuff going on. So Callie, appreciate you being here.
Yeah, thank you so much for having me. Always good to hop on and talk with you.
Yeah, for sure. So maybe like let's go back, and I think the origin story is always very relevant in knowing like it's cool what you got going on now, but how do we get here, right? Like how do we kind of scale up, and how do we leverage up? Like what's a little bit of the backstory between you and your partnership group, and kind of how you guys got started in real estate?
Yeah, for sure. So I would say our origin story starts on Josh's and my first date when we were 18 years old. And he was the son of a contractor and did a lot of flooring installation, handyman type work all the way, from the time he was old enough to hold a hammer and then even up through college. So very familiar with the building process. And of course, I've got my degree from HGTV, like so many of us do.
Mm-hmm.
And so we talked about how cool it would be to flip a house. And then 10 years later, we flipped a house and it was really cool. And so at that open house in Nashville, we hosted it for other investor friends who were in a network. Hey, come take a look at what we did. We'll run through the deal with you and kind of show you the beginning to the end product that you're standing in now. And in that open house walked Todd Yarger, who is now our business partner. He had
Mm-hmm.
moved from Memphis. I had met him probably a year and a half before at a convention, just kind of in passing, visited with him for the 2-day event, and then we went our separate ways. And then there he was standing in our house in Nashville. He had
And he
quite a
was
bit.
looking at it from like a broker standpoint.
No, he was there just as a fellow investor. We were just kind of doing basically a show and tell
Oh,
for that
cool.
networking group. And he had kind of toyed around. He was like, I don't know if I'm going to go. And at the last minute, decided to come. He and Josh started talking golf, of course. That took all of 3 minutes for them to get on that subject. And we learned that Todd had access to some private capital from some projects that he had actually finished. His equity partners wanted to roll that into future deals. Well, we had a handful of deals and we're looking to raise the private capital. And so our partnership formed from there. And we went from where we were keeping, 2 to 4 renovations and builds going, and to where we are now, 10 to 15 on the residential side. And then, as so many of us do, we look for other related industries, right, that'll help support our overall goal in real estate. So we've brought in a general contracting company in-house, as well as a real estate brokerage. And then starting during COVID, really started shifting gears, and while still keeping the residential side going, starting doing the commercial acquisitions that eventually led us to a 24 unit property, a 60 unit property, and then a handful of smaller deals.
That's awesome. I love it. It's amazing, like the serendipity of just kind of like how paths cross and you get to meet people, and all of a sudden something hits off and you start talking about a different subject and realize, you know what, I could do business with this person. Like they have good values, they have a lot of ambition, they get a lot of good stuff done, they have success, track record in business or in their career. And then all of a sudden it's just like right timing, right place, and all of a sudden awesome partnerships end up coming together. So super cool. So you guys started doing like buying these small houses, and you were doing like mega flips, not just, you know, paint, flooring, fixtures. You guys were adding thousands of square feet to little homes and then turning them around um and then selling them. Tell me a little bit about that process. Like, what did it look like? I know that you've been doing a lot of speaking stuff recently, and so I know that you just did the talk on like the 5 tips for like large scale 7-figure flippers. I'd love to like hit on a couple of those if you're up for it.
Yeah, for sure. So we got started in this process really out of necessity. Everyone wants the paint and carpet rehabs. And we kind of entered the scene around 2017 when things in real estate were really starting to heat up. And we were being told all over the place from people in networking groups, like, hey, there aren't deals in Nashville, there aren't deals in Nashville. And we thought, no, I don't think that's right. There's got to be deals in Nashville. And so that's what led us to a lot of properties that had been overlooked because it was 700 square feet listed at $200 a square foot in horrible condition. And then your resale price for something renovated was right around that $200 to $250 a square foot. Well, there's no margins there.
Mm-hmm.
Unless you take off all of the walls and you take off the roof, build back, build up, and now all of a sudden you have created essentially a new build. And in the markets that we were in, the specific zip codes, renovated properties and new builds were selling at the same dollar amount per square foot. What we were able to do then was to bypass a lot of things with lot improvements, running sewer, doing perk
Yeah.
tests, getting engineers in for electric, because that all existed because the home already existed. So we would just need to upgrade service on the electric if needed. Otherwise, we had a completely build ready lot because the house did exist there.
How was it with dealing with the city and getting the approvals and the zoning and to add that much more square footage? It seems like a big hoop to jump through, which because of that barrier to entry is why nobody was doing it, right? Like, what was it that you guys figured out that you could do? And I'd assume it's somewhere in that regard. One, having the ambition to take on a big construction project like that and having more holding costs, but having more upside to it. But it seems like one of those things that a lot of people just see like, oh my gosh, I couldn't even imagine ripping walls off and ripping the ceiling off and the roof off and just going up and out and all this other stuff seems like too big of a project for somebody to bite off. Do you think that was probably the barrier to entry for most people, or were there like zoning restrictions and some of that too, or a combination of all?
Combination of all, and I think a lot of it's just that fear factor, right? If you go in and you're expecting, a house built in the 1980s where electric's pretty well up to code, your plumbing's in good shape, those are easy. That's a low barrier of entry. You're probably not going to run into too many terrible things. A lot of what we've got in Nashville was properties built 1915 to 1945, and possibly not a whole lot of things touched in between. So that was a big deterrent. Not knowing what's behind wall number one. If you go in to traditionally flip these, you're going to find a lot of problems. Well, we're demolishing most of the walls, so we kind of knew what we were getting into. Most of it didn't matter. So from there, just really being able to go down to codes and ask the right questions and understanding that there's a building envelope and that there are setbacks and that we need to check for easements, and just kind of having that mental checklist of all of the right questions to ask while we were still under contract rather than after closing. So that way you don't get into a big problem that you didn't anticipate. And
Mm-hmm.
then we learned a lot about stormwater system, which, a lot of larger places or places that are growing rapidly, they look at the lot coverage. So the square footage of the lot compared to how much the square footage of your footprint of your house, to determine what we need to do as far as water mitigation. And then for us, it was just learning how big the footprint could be without having to add on a lot of extra infrastructure to mitigate water.
Mm-hmm. Yeah, because otherwise you have to start putting like retainage systems and things
Mhm.
underneath the grass and it creates additional restrictions with like, I've had buddies who wanted to put a patio in or they wanted to put a pool in or whatever, and all of a sudden they can't unless they remove other parts of their home in order to be able to do those things. So that's it's one of those things you kind of learn as you go along, right? Fortunately, you guys had some construction background, but at the
Mhm.
same time, it's like you learn something new and you go through the motions of taking action and learning as you take action, right? I think like, well, how do I ever learn as much as, you know, whoever's talking up on stage or the person the on social media? It's like just by doing the activity, right? Like there's still things that we're learning. I was on a phone call a couple minutes ago talking to attorneys about what about this or what about that? What's the best case scenario over here or the worst case scenario? And what's the likelihood of each of those? And then we make a decision and then they give me feedback. And now I know that and I can make a quicker decision next time on what that looks like. So, or whenever we're pressed with that issue. So I think it's just take action, right? Go down there, ask the questions of the zoning department. What else should I be asking you that I haven't asked you yet? Like that's a
Mhm.
good question to ask. So I love that you utilize the other resources in the marketplace. Let's go hit on. I want to talk about the five tips that you gave at your talk the other night. Go through some of those for me. Like, what are the things? It was such a competitive market in flipping over the past few years, and then things have kind of slowed down a little bit. More so, I would think in commercial real estate has slowed down, but residential, there's still a lot of folks out there flipping, out there wholesaling, and some having a lot of success, some struggling. What are some of those 5 tips? What are the 5 tips that you provided when you were talking the other night that you gave to people who were kind of up and coming into that game?
Sure. So, what I'm looking at are tips that are going to sustain and be relevant regardless of whether the market is up or whether the market is down. There's a few key things just to have in
Love that.
place. And so, the first one is having a sorting mindset. And this is so huge. If I would have done this on the front end, I can't even tell you the hours I would have saved, is to have your buy box and know what that is. So, for us now, it's the property has to be where I can drive to it from my office in under 30 minutes, regardless of traffic. That way I can keep a hold on things and I can keep a really tight rein on the market, knowing exactly what's going on because it's literally where I live and work and play at all times. And so
Mm-hmm.
now when I get a deal through, maybe it comes through from Columbia, Tennessee, great deal, development opportunity. I can immediately delete that because that's a great deal for somebody else. Columbia, Tennessee is too far of a drive. And I know that that's going to create complications in my process. And so I really changed this over in the last 3 years from going to, especially when you're new, right? You get all of these fantastic deals. You're like, great deals, great deals. And so the inclination is to assess every one of them and see if it meets your criteria. If you have those broad criteria, you can sort through them really fast. This is a bucket for me. This is a bucket not for me, and really focus your energy. So that's the first one.
I love
Um,
that. And I love that you're staying in your own backyard, right? Like I'm guilty of this. Went wide, went to 12 different states, and then all of a sudden you got to learn the marketing for 12 different states. You got to find the landlord tenant laws. You got to find the attorneys. You have to find the management companies. You find the contractors. Figure out the housing courts. It's like there's so many things that you have to figure out, and you got to get on an airplane in order to travel there, and then get a hotel, and then be like, it's nonsense. And so one of the things that we're doing is we're consolidating, taking your advice and just sticking to our own backyard. So we're in the Carolinas and we're in Ohio now, and that's it.
and sometimes you have to get, I think that you've said this, you have to get smaller in order to grow. And yeah,
Very
that's
much
been
so.
huge. And it just preserves so much of your time when you know that. And it's not to say that your criteria can never change. This is not the be all of end all. However, if you've got a good handle on this, you're going to save tons of time just
Yep.
in your evaluation process alone. And then number two, we've hit on a little bit, just having an idea of zoning and codes in your area. You're never going to memorize every single zoning law and every single code as it applies to every area you work in, but you do need to know where you can get that information. And
Mm-hmm.
so locally, I've got my handful of email addresses, my handful of people to call, and my handful of websites, so I can look at something very quickly.
Give me a couple of ideas on that. Where if somebody wants to go and build something, like who should they call? Who should they talk to? Are they talking to engineers? Are they talking to architects? Are they talking to real estate attorneys? Are they talking to the building department? All the above?
Definitely all of the above. I always start with the zoning because if a lot is not zoned or it needs to be rezoned, that's going to be kind of locally the highest level is like, can I even build what I'm thinking I can build here? And if the answer is yes, okay, then I need to talk with the planning department. So if you have emails, and honestly, any city that you're in, I would just call down to the zoning office, be like, hey, here is what I do. I wouldn't say, hey, I'm thinking about maybe I'm going to get into this.
Mm-hmm.
Very sure, like, hey, I'm doing development in this area. What is the best way for me to get the answers I need? And what information can I provide to you so that we can get through any questions quickly and to preserve your time as well? It's kind of collaborating.
Do you feel like you got to walk on eggshells when you're talking to the county or talking to the city departments on some of this stuff? So that way you're like asking them questions, but not giving away too much? Or have you found that just open honesty, best policy, but sometimes they make things a lot more difficult when they know what's happening or they have too much information. What have you found is a good balance on that?
Yeah, I think a good balance is if you're looking to go under contract or, I I start with it on the paperwork. And if I'm looking to buy something, I will put in the contract contingent on zoning approval of XYZ. Then I can go to the zoning department. I'm not a tire kicker.
Hmm.
I'm actually someone who has something like, hey, I have this lot under contract. This is what I want to do. Yes or no?
Mhm.
And so having done a little bit more footwork on my end, rather than just kind of calling them constantly, because you can become that person like, oh gosh, here's Callie calling again. She's
Yeah,
not ever doing anything. But when you
that's
come to
funny.
them with a contract and a good idea of what you want to do, you can get answers a little bit quicker. Now, if you're looking at something maybe just in a broad and general sense, like, hey, I'm looking at this particular zip code. I see that these lots have been zoned in this way and have this kind of frontage. If I were to get a lot with, maybe less frontage, would you be in support of me doing, a similar project? And just having good reference showing that you know what you're talking about. And then just having a good idea of what the different zoning codes mean, just from a broad spectrum. That way you're not going in saying, hey, can I build an apartment complex on this 5,000 square foot lot? Well, no.
Yep. Yep.
Ask good questions.
Yeah, I think the attorneys and having the right clauses and contingencies in these contracts is such an important piece, because I've seen some really bad decisions made across the board on development deals that weren't zoned or didn't have the density that we wanted to get, or like not even me, but some projects that I've been in have had that happen, but also other people's projects that I hear about all the time, man, where they go out and they lock up a deal and they don't have that and they just buy it because they can get the land at super cheap, and then all of a sudden they're stuck and they're
Mhm.
holding the bag on this thing, and they can't do anything near what they want to do with it, and they don't have the expertise to do something else with it either. So it's really, really important that you have those contingencies in there. What's number 3?
So number 3 is to know your costs. And that seems really obvious as in knowing your construction costs. But other things I think get overlooked is understanding your days on market for different zip codes and even different little sub neighborhoods within zip codes, and knowing the difference in areas that sell in 30 days on market versus 90 to 100 days on market. Some of our higher end, more luxury items, what we've seen is more, past that $1.5 million, those move slower, not because it's, not as good of a property or there's not interest. It's just buyers at those price points tend to have money now. They're going to have money later. They may not have the time constraint of a buyer in a more affordable type of product. And so just kind of knowing that, one, on a $1.5 million home, your holding costs are considerably more expensive, your insurance, even just your loan. And then knowing that, hey, this might take me 3 to 6 months to sell, as opposed to a smaller, more affordable type product. All of those things play in. And then you get into, knowing your loan renewal costs, because that might come up in some of these larger mega flips like what we've done. And so not just your construction cost globally.
I think what I'm hearing is like having good expectations set in your own mind of what this is going to look like, and not over promising yourself and thinking that you're looking at the optimal uh exit strategy every single time. Like, guess what? You're going to probably have to extend your 6 month hard money loan into another 6 months. And what does that extension fee cost, and the holding cost and the carrying cost? Because it's not going to move as quickly as a $300,000 house. I think that's really, really, there's a lot of wisdom that goes into that I think someone newer in that space trying to scale up into these bigger deals um, might overlook, I think, in a lot of scenarios.
Yeah, and it's easy to do. And yeah, ask me how I know.
Exactly.
This episode of the Legacy Podcast is brought to you by the Legacy Boardroom Mastermind. So our goal is to give as much free information away as humanly possible through all of our social media platforms, and try to help people with their businesses, help people with their lives. We also have something for people who want more one-on-one attention, which is Legacy Boardroom. Legacy Boardroom is a board of directors for your business. If you are doing up to about $10 million a year in gross revenue, you're making some money, you got some good things happening, but maybe you can't afford a C-suite of executives, of a chief marketing officer, a chief operating officer, a chief investment officer, a chief human resources officer, and you need access to these fractional C-suite executives. That's what this was built for, at a fraction of the price of what you can find anywhere else in the marketplace. So it's my actual team who have built multiple 7 and 8 and 9-figure businesses and real estate portfolios that is available every single day of the week on these daily boardroom calls. So any questions that you have, you can hop on, ask questions about operations to my COO, ask questions about acquisitions to my CMO, ask questions about raising private money to my chief investment officer, or team building to my chief HR officer. So they're available for you 5 days a week. any questions that you have, any hurdles that you're facing, anything that you need, these guys are available to help you break through any sort of barriers and take your business to the next level, so that way you can build a business that is designed to feed your life and your lifestyle. So if you're interested in learning a little bit more, check out legacyboardroom.com.
How about 4?
Number 4, design wisely. I like to say, follow the comps, don't follow your heart. When you get into flipping, I'm not gonna, it's fun. It's fun to design things. It's fun to look at Pinterest. It's great to look at all of these websites, but you've got to know what's going on in the neighborhood and not choose something because you love it so much and because you just know it's the most beautiful. Choose it because it makes sense and can make you money on the backside. And I've fallen victim to this, getting wrapped up into the excitement, because this is the attractive part of the process, right? The design and the flashy, you have beautiful pictures, but if that beautiful home puts you out so much money that now you can't recoup what you put into there, it was not worth your time, and it just wasn't worth it. So,
Mm-hmm.
and then also knowing things that you can overcome and things you can't. If your floor plan is terrible, it doesn't matter how beautiful your chandeliers, it just doesn't matter. And then if your house is in a location with maybe a highway running through it or power lines right next door, again, ask me how I know. That's those are specific examples. It doesn't matter what you do on the inside of that house, you're still going to have those objections. So just using design to make you money, not just because it's a fun process.
Yep. How have you found a balance between the plain Jane of just, the same that everybody else does, of like the same colored walls, the same countertops, the same fixtures, the same, all the same stuff, versus some flash pizzazz, but not getting too flashy, not getting too unique, not having something that's like, whoa, it's bold, a little too bold for me, right? How do you find that balance? But
So we've
but
been
you want to look different than what the boring stuff is, but not too wild, right?
100%. And so we use this with our multifamily as well, because again, whether it's an end buyer or a renter, you want to offer them something that's maybe a little bit better than the comps, that's not going to cost you in the long run. So I like to focus on key areas. My upgrades, I'll typically make like a dining room chandelier. If you add a couple $100s to that, you can get a much nicer product than just a builder grade. But it's also not such, if a buyer sees that and they don't love it, that's not a barrier in their mind, because they know that that's not a big thing to change out. Same with like kitchen faucets. I'll go a little bit nicer there. And in primary suites, I do like to use a name brand product for all my plumbing fixtures, but I have found the name brands that offer the lowest entry price point, but also the best level of product. So I'm not having to come back on a warranty or after it's rented out. So people are able to see that brand name and associate, the confidence that you get with that, but it's not at a price tag that's going to cost me too much on the front end or in maintenance on the back end. And then I like to focus on some key areas with maybe just some painted accent walls. No one has ever objected to a charcoal gray. For some reason, people that's a bold choice, but it's still neutral enough that people are like, oh, that's really nice, but it doesn't intimidate them like, a bolder statement, bright color might. And so again, paint costs what paint costs. White paint and charcoal gray paint don't cost any different. So that's a nice way to add a little bit of an upgrade or perceived upgrade that gives a little bit of style. So it's not just builder spray paint white, but is also not affecting my bottom line.
Sorry, I was muted. Those are really good insights. That I think it's a great way of looking at it, because now you can get exciting on things that are easy to change out, or the buyer can say, hey, oh, you don't like the color of the accent wall? No problem. I'll just repaint it before closing. No sweat. And it's not much money out of pocket for you, versus trying to get some wild backsplash. Then you got to rip it all out and put a brand new one in. I think it's a really, really good insight. How about number 5?
And then number 5 is having a sales strategy. And I think in the market now, with the shifting that we've seen, this is more important than ever right now. I'm not going to lie, I missed 2020 and 2021. I never pre-listed a single property because the value was going up, sometimes even by like 10% in a 6-month holding period. Whereas now you've got to have a realtor who understands the market, understands pockets in the market, and is ready to take action on this. And they can kind of guide you on that. Like, hey, maybe we should go ahead and put this as a coming soon, 30 days out. as opposed to waiting, or in some zip codes, it still might be better to go ahead and wait. And just having that strategy before the day you need to list it. Whereas,
Mm-hmm.
2020, 2021, I'm not listing this thing until the very last second because I know I'm going to lose money by listing too soon. I don't think we're in that climate anymore, at least most markets. Obviously, you'll still have your pinpointed neighborhoods and highly desirable locations where maybe that works. But knowing that on the front end, and like we talked about, knowing kind of those days on market so you can be prepared and know what to expect as you get closer to listing and then during the listing process is key.
I love the flexibility and like the dynamic strategizing all the time. Like you have to be evolving, you have to be changing, you have to be paying attention. A lot of these are great foundational items, and at the same time, you're flexible, right? And you understand that things change, markets change, buyer tastes change, and you're moving along with that. You're not just set in stone and only fixated on one way of doing business. You guys are really, really creative in that side of things. I think those are all really, really cool and awesome strategies. What someone listening to this is like, Callie has got her stuff together, right? Like she knows what she's doing. She does this at a high level, high quantity, high volume, and really nice stuff, right? And so might be a little bit intimidating for some folks, like how you got to where you are. Are there experiences in the past? Like I know we were talking offline a little bit. You talked about Dave Goins and how he gave you some insights and some ideas and kind of gave you a perspective shift a few years ago at one of the summits that we hosted. And are there any things like that have really been a pivot for you mentally and given you more confidence? Like, give me some examples of those.
Yeah, what Dave and I talked about, it was, I guess, would have been 2022 in Denver.
Yeah.
It was kind of a shift for me. And whenever we have, I'm part of your legacy family. And so with each summit, like, it can be very intimidating to walk into those rooms. And, the first time I went, I was like, I know that I am the little fish here, like by such a long shot. And so, I was just absorbing what's going around me. And I think looking at all of, these presenters on stage and people around me, like, wow, this is a lot. How did they get to where they are? And I was essentially putting people on pedestals, and rightfully so. I mean, what they had done deserved a lot of respect. And so I kind of told myself, like, you got to stop being intimidated. Just go do what scares you. And so at the Denver summit, I just told myself, everyone who gets on that stage, I'm going to immediately find them. I'm going to introduce myself and I'm going to talk to them. I don't know what's going to happen, but that just seemed like a barrier to cross. Like, okay, these are, I know these are just people, but also these are the stage people.
Yeah.
And I kind of told David that a little bit. And I was like, hey, I've been like really nervous, but I'm just making myself do it anyway. He said it in the nicest way. And I'm paraphrasing. He nicely told me to quit fangirling. And he said, the difference between you and those people on the stage. And I was like, yeah, a lot of differences. He's like, no, it's location. He's like, they're on the stage and you're not on the stage. That's the difference in you as humans. He said, they just have something they're really, really good at. And he said, Callie, you've got something you're good at too. What is it? And I was able to tell him I'm good at taking a complex process and breaking it down into actionable items and systems. That's what I'm good at. He said, well, do something with that. And I think no one had ever talked to me like that. Just like, hey, you need to calm down. Those are just humans. You're just a human. Figure out the gap and just move on with yourself.
I love it.
And so that kind of led me to think, I'm like, well, okay, yeah, he's right. How did these people get on the stage? Well, they probably told someone they wanted to. And so from there, I kind of cooked that idea in my head, and I just started reaching out. It's probably about a year later, to people in my network. I go to a lot of events where you've got people presenting and sharing what they've learned, their wins, their losses. And so I just emailed those people, the groups, because I knew them already. I said, hey, if you need someone, if you have a speaker back out, if you need someone, I'd love to jump in and help. And no one said no, because
That's awesome.
to find people to fill these spots. And that was a place where I could step in, and it just kind of built from there.
That's awesome. No, it's going through the motions, right? Like I was terrified the first time I ever spoke in front of a group of people, and it was literally 3 people in the audience, and I was like shaking and shivering and didn't like it was so intimidating. But I went up and did it, and I talked for literally 2 to 3 minutes and gave like a testimonial on something that I had some success at. And then I did it again, and then I did it again, and then they asked me to open up the event and kind of not MC it, but just kind of like open it up and introduce the speaker. And then that would terrify me, but I did it. And then I did it again and again. And then you just take these little steps. You jump on a podcast, you do a Facebook Live, you speak in front of a group of 10 people before you speak in front of a group of 100 people, and you build the muscle up. It's just like exercise. You go and start out with the light weights first. And as you build the muscle, you get into heavier weights and more reps and doing it. And then all of a sudden you pick your head up and you're like, oh man, I'm way further along than I ever thought I was. And I think another thing that you said there is that David pointed out was like, these people just became experts at one thing. And by becoming an expert at one thing, if you put me on stage and ask me to talk about something that I don't know what I'm talking about, I'm stuttering, I'm tripping over my words. I don't know what, like, I'm lost up there and I'm very nervous. And then all of a sudden I get stage fright. And then all of a sudden this cognitive dissonance pops in my head of what is everybody thinking about me? And then I can't think about my thoughts even more. And that's what happens when you don't know your subject matter. But if you put me on stage to ask me about commercial real estate and apartment buildings, I can do that in my sleep. And so that's what gives you the confidence, I think, when you get up on these stages. Just let's talk about things that you're a subject matter expert at. And we all have that, right? Like you have that in multiple capacities, and focus on those things. And then you can bridge out a little bit and talk about something else, and talk about goal setting then next time, or talk about team building next time, or finding the right partner. And again, I think it just builds up the muscle. You've been doing a great job at it. You've been on our stage several times in the past couple of years, and discussion panels and all those things. And I see you speaking at other events. It's really, really cool to see the growth and see, you come out of your shell and talk to folks about what you're doing, because you give a ton of value.
Well, I appreciate that, and the opportunity that Legacy Family, especially, that's just been instrumental, because that is where that whole perspective shift started. And then the opportunities that you've given me with this podcast, and then working on panels and whatnot, it's been incredible, and I'm having such a fun time with it too. It's like, that's really neat to have moved from like, I don't think I could ever do this, to I'm doing this and I'm excited about it, and just the growth that I've seen in myself along the way. So thank you. Yeah,
it's awesome. Now, and you're going to see awesome opportunities and great relationships and great friendships that come out of it, all because you were willing to get out of your shell and talk. And then all of a sudden somebody comes up to you and they relate to you in some capacity, and they're partners with their husband, right? And they're talking to you about all sorts of different stuff. And it's really cool to see, again, those opportunities that pop up from it. So let's I'd love to know what does the future look like, right? Despite what's going on with the market and the economy and interest rates and all the other stuff, what do you see the next 18 months looking like for you, and what your goals and your ambitions are?
Yeah, for us personally, we've shifted several of the properties that we were going to sell. We're actually going to roll those into a rental loan, and we're going to hold on to those probably for 3 to 5 years. I could definitely get these properties sold around 500,000. The value should be closer to 550 to 575, especially if I give it that 3 to 5 years. So just kind of holding down, we may break even or make a little bit on the rental, but the equity that we're going to build, I think, is great. And so again, like we've talked about, having multiple exits and realistic expectations, we're not going to make a landfall, a large sum of money if we sell those right now. So we're just going to hold tight, and, there's only so much land on this earth. And I have this conversation with people pretty frequently, is it's a limited commodity. There's only so much of it. We're not getting more, and we're not able to colonize Mars just yet. So just sitting tight on some of these until the market's a little bit more favorable, has calmed down a little bit. That's what we're doing with the stuff we have in Nashville. As far as we have a 60 unit in Bristol, Virginia, that we just did a bridge loan on. And so we were able to offer a lot of good move-in specials to, once we finish the value add, get the occupancy rate up quickly to get that shorter term financing in place. Now, upon the renewals, we'll be able to raise those rent rates a little bit, and then possibly add back in some utilities that we have lumped in with the rent, to then put us in a better spot for even more optimal funding on that one. Right now, we have $2.2 million in equity, which was just a huge win on that project.
It's amazing.
Really incredible. It was quite the lift, and that's done. And so now it's just to get this performing even better, to get that stabilized long-term financing. But the global...
I'm sorry, go ahead.
No, go ahead.
Well, I was going to ask, on that specific deal, you're planning on holding it long-term, right? So it's Would you say it was 60, 65 units?
60 units.
60 units. And what would you say this? I just want to do a quick math equation because I was actually talking with Trevor. I had Trevor West on the podcast yesterday. And so I was just talking with him and he's like, yeah, man, I own 73 doors or something like that right now. And I was like, dude, do you realize what that looks like in 25 years when everything's paid off and the value doubles and you have this insane amount of cash flow that comes in? If you never did another thing today and you only manage that portfolio, you make a decent income off of it right now, but you've got this thing that's your predictable retirement. It's not a 401k that you or some investment in the stock market or even a Roth. I love Roth IRAs, but at the end of the day, it's like we're in real estate and we have the ability to buy an asset where we provide enough value, where the tenant pays enough money that covers all the operating expenses, all the debt service, puts a couple bucks in our pocket, and pays our note down, and that appreciates over time. And then you're like, you pick your head up in 25 years. And this deal isn't worth $2 million of equity to you. It's worth, you got it doubled in value and paid off free and clear. So call it, take it from $6 or $7 million up to $15 million and it's owned free and clear. Like, think about what that does. And it completely changes and can change somebody's trajectory on their family tree. It's like, it gives me the chills and gets me really amped up every time I think about that. And it's such a simple concept. But one thing that you just said was on these deals you're holding on to, you're not willing to make permanent decisions based on temporary circumstances, which is a brilliant, tons of wisdom in that, because you see it too much. You see people making bad long-term decisions based on short-term circumstances. And because of that, they find themselves in a tight spot more often than not. If you have a long-term mindset and you're thinking about the future and you're always making a decision, what's going to be best for the future, you're always making better decisions across the board. Pretty much every example that I've ever looked at personally, that has been the case. And if more people thought with that mindset, they would go and buy one house, one duplex, one quadplex, one 10-unit building per year, and let it compound from the time they're 20 years old to 40 years old. And by the time they're 65 years old, they've got all this property owned free and clear. And they have the retirement that they always dreamt of without ever having to leave it up to somebody else or leaving it up to the government to put that in place. So yeah, big accolades to you. It's a lot, like really exciting.
Yep. Short-term pain for long-term gain.
Mm-hmm.
And yeah, doesn't you just weather the storm and know it's going to turn.
Mm-hmm. So then what was the other thing that you were going to say from a corporate standpoint, I think?
So large or, big picture.
Yeah.
What we're looking at is combining all of our assets as well as our cash flow businesses, possibly the brokerage, and we have an e-commerce business as well that we haven't really even talked about much, as well as the general contracting company, into basically one large portfolio, and then doing this as an offering. So there's an opportunity for our equity partners and investors to actually put property in of their own and get shares. And then you've got the cash flow of these businesses, the equity in the property. And the goal would be to have everything under essentially one company to then do an offering. And then it basically diversifies everybody's risk. And so we have cash flow coming in backed by assets growing in equity. And basically the concept of a rising tide raises all ships. Everyone part of this, it's growing in security as well as
it's a roll up is what it is. It's a roll. It's the same thing that John D. Rockefeller did with oil companies. He said, hey, I'll either buy you out at this price, or you can enroll your company into mine and get equity in this bigger, greater company. And now your value is worth more because we have scale. We have the ability to reduce the operating, the overhead and the expenses that we have. And we're more attractive to a larger REIT buyer or hedge fund, or potentially even going public with a large enough portfolio of businesses and assets, to the point where you get the valuation much like many multiples more than what you would get if you ever sold, or anybody would sell it individually. And so I love it. And I love that there's active income and there's long-term wealth building. And having that balance is really critical. And it's a gap I see a lot of entrepreneurs miss out on. They focus too much on the net worth and the equity on paper, but you can't pay bills with that. And then I've seen other entrepreneurs that focus all on the cash and right now money, but there's no enterprise value there, and they have to stay on the rat race. And a combination of both of those things brought together is where it's at for sure, from a wealth building long-term perspective.
Yeah, absolutely. So kind of the culmination of all the things we've done right, all the things we've gotten wrong, and then how do we balance those two to make something really stable and lasting?
I love it. Super exciting. So let's close out with this. How does somebody get a hold of you if they want you to come out and speak on their podcast or speak at their event or talk to you about investing in your roll-up? What does that look like? What are the best places for them to connect with you?
Sure. You can find me on social media. It's Callie Walker Loewen, both on Facebook and on Instagram. And then my email is Callie, Callie, at southernlegacy.co, just .co. And I would be happy to talk to anyone that we could help, from an investment standpoint. If someone needs a brokerage in Tennessee that's investor friendly, Oyster Real Estate Advisors, we'd be glad to step in and help. And then if anyone has found any value in what we've talked about today, I'm glad to talk about podcast or live events.
I love it. Awesome. Well, I'll tell you what, super proud of you. It's a huge honor to have you on here and a huge honor to have you a part of Legacy family, and just excited to stay on the journey with you and see where we all pick our heads up and where we're at in another 5 years from now. So thank you again for being here.
Thank you so much, Tim. I appreciate everything that you do for me personally, and obviously for Legacy family. I'll just speak collectively for everyone and just give you a big thank you.
Appreciate you. All right, guys, until next time, we'll see you on the Legacy Podcast. See you next Sunday.
Hey, well, thank you for being here. Hopefully you got a ton of great value out of this episode. We try to give as much free value as possible across all of our social media platforms. So please make sure that you're connected with us. We are at Legacy Wealth on YouTube. We are at Tim Bratz on all other social media platforms, and we're available anywhere that you listen to podcasts. The best way that you can support this podcast is by just subscribing to our YouTube channel, by liking the video, by commenting on it, and by sharing it with anyone else who might get some great value out of it. So thank you again for being here. We'll see you next Sunday on the Legacy Podcast.